Welcome back to the show. In this segment today, we feature Dirk Pereira, the Chief Executive Officer of Union Assurance, who discusses the issues facing Sri Lanka's insurance sector. During this exclusive interview, Pereira focuses on the lack of awareness among the general public of the need to have insurance cover, the fierce competition in the insurance sector, and many other issues that confront the industry. Now, here's Dirk Pereira. Thank you for joining us on Benchmark, Dirk, and today we're going to talk about consumer focus in insurance. How is the insurance sector faring these days?
Insurance is doing quite well, driven by economic activity 2011, expecting a slight slowdown obviously in 2012, but industry generally feels that's a short-term dip. Long-term, medium-term economic activity is considered to be quite strong, so insurance generally drives on this economic activity. Life insurance continues to do quite well. General insurance as well will continue to do well across most of the segments, corporate as well as retail. So we are quite positive about the growth momentum that the industry has had over the last few years will certainly continue into the medium term, and obviously taking a longer term view, we are looking at a totally different market getting created for insurance.
You spoke about less penetration or low penetration. Now, would you agree that the majority of the people are actually unfamiliar and therefore unconcerned about having life insurance? And this is partly because the reason for Sri Lanka's extremely low penetration. Now, isn't it time that the insurance sector, players like yourselves, actually get together cohesively and work in unison to work an awareness program in the interest of the citizenry as opposed to actually increasing individual business volumes?
Last year, Savitri, the Insurance Association did get together. So all the insurance companies got together. We had a common awareness platform. All the life insurance companies brought together not only an advertising budget, but also got a lot of activity at the ground level where this awareness with regard to the value of insurance was taken across the country. So it was quite a successful initiative. Probably 2011, it's difficult to say how much of that activity really resulted in volume growth, but clearly the positive sentiments out of that were quite strong. So the industry believes that there is certainly some space for the industry together with the regulator as well as the Ombudsman's office, this time bringing in some of the broker community as well, to take a multi-stakeholder kind of approach and go forward on the awareness. So that's at an industry level, but of course individual companies also do a lot to promote awareness through their own advertising campaigns, through their field forces on the ground. So there is pretty much a multi-pronged approach. We would say insurance as although it's relatively low in terms of GDP, it's probably around 0.5, 0.6. We would say in terms of number of working age population, it's closer to 30%. So that's not a bad number when you say from a pure penetration perspective, where the industry believes that there is that disconnect between per capita penetration and population penetration is probably that people don't have the adequate insurance that they require to create that financial safety net.
Now, despite this low penetration, Dirk, the life segment grew by a healthy 13% last year to top 35 billion rupees. Now, this multi-pronged approach that you spoke about, how practical is it and has it actually achieved its objectives?
Generally, life insurance, we would say as industry players, the competition isn't that direct. There is a clear need for life insurance. There is a significant under-penetration, whether that is in terms of the protection gap or whether that's in terms of pure population. So in terms of life insurance, the competitiveness is not as intense as we would say in general insurance, where it's pretty much a price-driven market at the moment. So there is a lot of opportunity for life insurance, and as you said, it's been growing reasonably at a reasonably decent pace. We expect that pace to accelerate over the medium term. We're not really sure how that pace would be in 2012, but certainly if you take a 5-year view, then certainly that momentum plus should be coming through. So I wouldn't really say life insurance is a very competitive industry. It's not competitive in the sense of the competitors creating a perfect storm. It's more that, as you said, more awareness needs to be created. mechanisms to collect premiums need to be built in, consumer awareness regarding the benefits of insurance as a financial services product that combines potential protection and savings elements. Those are the aspects that need to be worked on a little bit more, I believe.
Dirk, why is medical insurance not popular in Sri Lanka? Is it because of the high premiums and people simply can't afford it?
I really don't have statistics, Savitri, but medical insurance at the corporate segment is quite a popular product. It's quite competitively priced as well. There is a growing segment of the corporate segment that offers, as employers offers it to their employees. You would see in the recent past there are quite a few retail health products that have also come in targeting individuals very specifically. So perhaps there is a disconnect between the premium volumes that insurers want to collect versus the premiums that a consumer can initially afford. But I believe that gap will slowly reduce as more volumes grow. Obviously that benefit will be passed on to individual consumers by insurers. Similarly, as economic activity takes place, disposable incomes will rise. This will become a need, because clearly there is a situation where consumers want a higher quality of health care, and the only way they can get it is to supplement whatever they are getting from the corporates that they work for with some element of private saving as well. So insurance would work well in that mechanism.
In addition, people are finding the cost of living to be somewhat high, and therefore disposable income decreases. Now, this could also be affecting the fact that some people may want to get medical insurance, but just put that on the back burner due to this. What do you think?
Yeah, the cost of living thing is an interesting argument. I suppose the cost of living spiral would affect not only the purchase decision for health insurance, but insurance per se, many other aspects which might not be considered a necessity. We don't essentially focus on where the cost of living is going. Rather, we just take a medium term to long term view in terms of where the economy is going and where would the consumers' needs generally evolve to. There's a lot of knowledge that we can gather from regional economies and how consumerism has driven some of those products and those sales processes. So as I said, we're not really focusing on this initial or the 2012, what would happen in the 2012 window. Rather, most of the products and processes are more geared to a medium-term view of where the insurance industry and, for example, health insurance per se will go.
Time for a commercial break. When we come back, Dirk Pereira discusses motor insurance, the role of the insurance ombudsman, and how to retain customers. Stay with us. Welcome back. We now continue with our exclusive interview with the CEO of Union Assurance, Dirk Pereira. How about motor insurance, Dirk? I mean, penetration is relatively higher, but that is probably because third-party insurance is compulsory in this country. But here too, there are claims that private car owners, those who don't drive company cars, do not have cover. Is there any truth in this, if at all, and what is being done about it?
There's no clear evidence that there is a lack of insurance among private car owners. It's an intuitive thing that probably there could be an element that has not purchased any insurance, but I think you would see in terms of awareness, I believe there is a significant amount of awareness that is just getting created by the fact that through media you see a lot of issues with regard to the economic as well as social impacts of vehicle accidents. Also from a consumer perspective, if you've invested significantly in a vehicle, then obviously having the right element of protection around that, because it has a significant financial impact on an individual, also brings in quite a strong element of purchase decision making. So, I mean, in short, I really don't have any, I really can't tell you whether there has been a lack of penetration or not, because there is no clear evidence that there has been or there hasn't been. My intuitive feeling is anyone who purchases a vehicle should generally purchase insurance, at least to safeguard their financial investment.
Now, Fitch Ratings recently released its forecast for life and non-life insurance sectors and called it stable, which suggests that most ratings are likely to be affirmed in the next 12 to 24 months. So it also shows that there's stability in both the life and non-life insurance sector, which perhaps indicates that operational and financial performance is on par with necessary standards. Now, from a sectoral point of view, Dirk, does this mean that the capital positions of insurance companies are healthy?
From a sectoral point of view, obviously Fitch is affirming that the operational and financial aspects are stable, continue. They do not expect there to be a decline. So obviously from a short-term perspective, that's correct. The insurance regulator has also brought in certain changes to the regulatory framework, requiring a minimum level of capital by 2015, requiring companies to move into what they call a risk-sensitive model of capital also by that same period. So a minimum 500 million share capital for life insurance, a similar amount for general insurance, and ideally, well, not ideally, but if you do have on the risk based, if you take your portfolio, your assets and liabilities, depending on that, there would be a further capital charge that may come in. So the regulator has also moved away from a fixed level of capital, or are trying very hard to move from a fixed level of capital to a level of capital more commensurate with the risk that the insurance companies will have. So generally I believe Fitch would also be looking at that aspect, because we don't believe that a stable fixed amount of capital would be necessarily healthy over the medium term, because insurers' books would be significantly different in terms of the risks that they carry.
Dirk, is there a lot of intercompany hopping in the insurance sector among customers?
There is a certain element of leakage in terms of especially the general insurance industry, because a general insurance policy is generally a annual policy, so customers do obviously have a lot of choice when it comes to renewal. On the life insurance segment, of course, it's a far more longer term commitment that a customer makes. Obviously then the purchasing decision, it takes longer, so different dynamics at play. Customers do have a choice when it comes to renewing definitely their general insurance. On the life side, obviously they would need to have a fair sense of the stability of the company, their ability to pay the claim or the eventual maturity proceeds at the end of the policy period. Obviously you would expect customers to have a fair sense of the product that they've purchased, whether it meets their needs. So two different dynamics in the general and life side.
So what about customer retention? What do companies like yours, for instance, do to ensure customer retention and loyalty?
Obviously from a retention perspective, service is paramount. Insurance is one of those products that you probably don't experience at the point of purchase, because the need is when you actually have a claim. So there's a raft of activities around trying to get your claims processes streamlined and faster, trying to cut through the clutter and the red tape, because at the end of the day, what the customer wants is to have the claim paid as soon as possible in the fairest manner possible. So I believe the insurance industry does a lot, although there is a significant amount of price competition. Generally the industry has a view that they have to compete on service, and there are a variety. Each company takes a variety of different approaches. Union Assurance has many platforms, from SMS to web-based to face-to-face to pure bricks and mortar. So a combination of initiatives take place to ensure that when the customer needs it most, he can get his claim or he can get his service as soon as possible.
Earlier on in this interview, you spoke in passing about the Insurance Ombudsman. Now, many people do not know about or what the Insurance Ombudsman does. The fact that he serves policyholders to resolve insurance disputes. Now, can you just give me in a nutshell, what is the benefit of having an Insurance Ombudsman to the insurer and the insured? And also, what is the role he plays?
In the event of a dispute between the insurer and the insured, then there is this mechanism where the insured or the customer can bring his or her case up with the ombudsman. There's a very clear demarcation in terms of his responsibilities vis-a-vis the insurer. He essentially acts as an independent party between the two parties to find a resolution. The process works very well. The ombudsman is well accepted by the industry. Customers, we believe, feel that there is a fair hearing to their grievances. So over the years, the whole mechanism has built a lot of confidence in itself. So customers are quite happy to go to the ombudsman to clear any of the disputes that they have, and similarly insurers are very happy to work with the ombudsman in terms of the skill set and the technical aspects he brings in. So balancing this technical aspect of the business with the consumer aspect, I believe the ombudsman has managed to find that right balance so that over time all the stakeholders are not disconnected with each other. In addition to that, the ombudsman plays a big role in terms of creating awareness about the benefits of insurance from a consumer perspective, what are the aspects they need to be aware of. So bridging that gap between insurers and consumers, the ombudsman plays a big role, so industry appreciates that very much as well.
That was the CEO of Union Assurance, Dirk Pereira. After the break, it's the Voice of Business.